One of the kind of easier, more glaring ones we see a lot is software costs, because those can easily get away from you if you're like, oh, it's only, $45 a month, but then you keep adding team members, it adds up. And then if you're not on top of offboarding team members when they leave and removing their licenses, you're going to waste money. Or how many software trials have we done the free trial and then they start billing us and we forget to cancel? And so that's just why reviewing and knowing your numbers and what's actually happening on your P&L is someplace to say, oh, wait a minute, why are we paying for this when we're not using it? Or this is just too high.
Hey, it's the Profit Answer Man, Rocky Lavani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo, using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line. Today, we're going to focus a little bit on the industry that's supposed to help you understand your finances and what they do and don't do, and what the reports tell you and don't tell you. We'll chat about bookkeeping, money leaks, your cash flow, and understanding why your reports are missing vital information that you actually need. Lauren Colson is a numbers geek with people skills. So am I. As the owner of Colson Strategies, she runs a small but mighty team. Lauren finds passion in helping business owners make the best, most informed decisions through financial information. Lauren knows you're working hard to grow your business, and as a financial expert, she doesn't take that lightly. She, along with her team, take the scary out of your finances so you can focus on what matters most. Her job is to empower entrepreneurs with the tools they need to make the best decisions in their business. She's also a fellow business owner, a mother, a coffee lover, a book lover, and a mindset enthusiast. That's why she's on, because those are all the things I love to talk about. Let's meet Lauren. Welcome to the Profit Answer Man, Lauren Colson. It's great to have you join us today.
Great to be here, Rocky.
Can you share a little bit about yourself and your business?
Yeah. So my name is Lauren Colson, and I am the founder and CEO of Colson Strategies. And we provide accounting services A to Z for small to mid-sized businesses. So we do everything from bookkeeping support, controller level accounting, and fractional CFO financial strategy.
And they are all very different.
They are all very different. And so some of our clients have one person, some of them have 5 people. It kind of depends on the size and the industry and the needs of our clients. So we're able to come into smaller businesses and help them scale and grow, which is a great model for those that especially are, cost conscious and can't afford to bring on full-time resources. We can be very flexible there.
So speaking of cost conscious, Can business owners do their own bookkeeping themselves? And when I say themselves, I don't mean bringing in an in-house bookkeeper. I mean the business owner doing the bookkeeping.
Yeah. So anything's possible, but I don't recommend it for a couple different reasons. One being, unless you created your business to be a bookkeeping business, it's probably not your area of expertise. And if you're sitting in the CEO seat, your time is so valuable and should be spent on sales, growth, strategy, not maintaining your books each month. Then there also comes with the sometimes complexity of actually doing the bookkeeping. And so in order to have the data be valuable, which is what what the end goal should be, so you can use that financial data to make good decisions, it needs to be accurate. And so you need to understand how financial coding works, make sure that you're coding things in the correct spot, whether the correct account, whether it's, a cost of goods sold or an operating expense, reconciling your accounts to the bank statements. And so there's some level of expertise there that we see business owners miss sometimes, which then, if you've heard the phrase garbage in, garbage out, if you've got things inconsistently categorized or incorrect, it's not going to be very useful for you as a business owner.
No, it's not. And even when they have outside people doing it, I've noticed that they don't communicate well with their outside team. And so they end up with some of the same issues because the people outside their business can't figure out some of these one-offs. Mm-hmm. Or sometimes there's something different that happened. And if you're not clear with it, then you run into some struggles. What are some of the biggest mistakes that you see some business owners make?
Yeah. So one of the biggest ones is making short-term decisions that hurt long-term profitability. And so an example of this, just because we were talking, it could be outsourcing your bookkeeping. So if you're trying to, say, okay, well, I can do this myself, so why am I going to pay for it? You're sacrificing, okay, I don't want to, decrease my profitability now, but that's not setting you up in the long run, because as you scale and grow, your role as a CEO changes. You need to be doing different things. And if you're tied down with whether it's your bookkeeping, your marketing, whatever it is, doing things like that because you're trying to save every dollar, you're going to end up losing dollars in the long run.
Any other mistakes you see people make?
Having too many priorities and projects at place where you're not actually focusing and all the attention on, optimizing one product or service line, making sure, that there's clear communication with your team, if you have a team or outside staff, and really focusing in on some key priorities. As an entrepreneur myself, I get it. There's a lot of exciting different things. And it's like, we can do that. We could do this. But I think staying focused on one or maybe two different big pieces of the business is what's really going to drive that growth and profitability. And you can certainly get to a place where you're, adding in, more projects, more products, services. But especially in the beginning, if you're not like laser focused on what those priorities are, it's going to be a distraction and you're going to see that fall through to your profitability or lack thereof.
And I think that's a big part of what I seem to be talking about all day. If we don't build a good foundation and we don't have all of our basics in place and we're constantly putting out fires, it usually shows up in the numbers and we can see it as the results of what happens. So you might be working harder and harder, but you don't get to keep any of the money, which is part of the problem that happens. Absolutely. Which kind of begs the question, where do you see most of the money leaks in businesses?
Yeah, so this can kind of depend on size and industry of businesses, but one of the kind of easier, more glaring ones we see a lot is software costs. Because those can easily get away from you if you're like, oh, it's only, $45 a month, but then you keep adding team members, it adds up. And then if you're not on top of offboarding team members when they leave and removing their licenses, you're going to waste money. Or how many software trials have we done the free trial? And then they start billing us and we forget to cancel. And so that's just why reviewing and knowing your numbers and what's actually happening on your P&L is someplace to say, oh, wait a minute, why are we paying for this when we're not using it? Or this is just too high.
How do small businesses keep track of all of this? Like somebody leaves, how do they remember, oh, I got to cancel the email. If they have a cell phone, cancel the cell phone, cancel the health insurance might be a little bit easier, but all of these different softwares, how do they even keep track of it all?
I know. And that's a great question, because having internal systems and processes is key for reasons like that and for getting ready for growth. And so understanding of, like, we use a project management tool called Asana. And so, for example, when we onboard a team member, we create a checklist within there of all of the access that we're granting them. So we know at any time, okay, this is what, this employee or this team member has access to. And then if or when you need to offboard them, you've got your list made up of everything. Okay, I need to go into these different items and remove access. So it's already set up for you from the beginning.
What other leaks do you see in the business?
Yeah, so I'll say that knowing your numbers is so important, and knowing what drives revenue. So your cost of goods sold is the cost of your product or service, which is a little bit more direct in that, okay, if we're selling a product, we have to actually buy the product to sell. And if we're doing a service, it's most likely people's time. And so those are a little bit easier to stay on top of. But diving into what's called your operating expenses, all of the other expenses on your P&L, is where you may find other leaks. And so understanding, are we actually utilizing these things? And are the things that we're spending our money on having some sort of ROI for the business? So before we, spend $15,000 to hire some new marketing firm to redo our website, what does that bring us? And there's not always a tangible, oh, it's going to bring us 10 clients, but doing the thought process behind, is this the right use of our money right now? Are we set up to scale? Do we have our messaging solid in our ideal customer? Or are we just going to attract people that aren't a good fit for us? So things like that, without having that kind of initial strategy behind investments like that, can also leak you money, as well as going to conferences and things like that. They can be great networking, learning environments, but really, like, what's your goal to get at? What are you getting out of the conference, and what kind of impact will that have on your business?
I know conferences have become very expensive, and it's not so much the conference itself, but airfare has skyrocketed. Hotel costs are up, and then dining costs at those locations go up. And I notice, even if I'm going to a conference that's not have a very expensive price tag for the conference itself, the rest of it has a massive price tag. And so that's a big thing for this year. We've stopped going to a lot of the previous conferences that we were going to, looking at new opportunities and asking those very direct questions, because it's very easy to, oh, this looks cool, let's go have fun. And
exactly. Yeah. And to your point, it's only $300 to register. So like in your mind, you're just picturing it's only $300. You're not adding up, like you said, the airfare, the travel, the meals, every meal and snack that you have while you're there, drinks, things like that can be double the conference price.
Oh, no, we're talking I think between hotel and air for me, I've noticed many times that on a $300 or $400 or $500 conference, the hotel and air are $1,500 to $2,000 with the food. And now all of a sudden it's a $2,500 expenditure. And now it's a question of, are we going to get that value out of it?
Exactly.
And the other thing is, like you said, just digging through the expense lines and having a way to understand, okay, I'm paying X for this software. How many licenses is and which ones are active? Because if somebody misses it, it adds up very, very quickly if it didn't get taken off for some reason. And to occasionally do an audit of all of that and double check to see if that's the case. And again, these days with so many software, while you may have been using it in the past, if people stopped using it, and nobody said anything to anyone, then you're paying for all that software that you're no longer using. Or if you popped up a tier and you didn't even know it.
Right.
And some of these softwares start at $200 and go to $2,000 very quickly. So that can make a big, big difference. Any other leaks you see in the business?
Those are our most common ones. I mean, there's a lot of, I would say, kind of teeters on leaks is putting personal expenses through the business is something that we don't advise, because then it muddies up what your business is the true profitability of your business, how it's actually performing. And that can also be, if you're seeing your profit go down month over month, that can be a, kind of mental barrier of, oh, we're not making as much money, but really you just have all these personal expenses throwing through that are making it look lower. And so there's a lot of that involved as well.
So I think there's a fine line, right? There's personal expenses, and then there's the things we want to put into our business to spend on. And it might be going to that conference, right? Because it's, I want to go do this, and it's that fine line. What we recommend, what we call in the terminology when you sell your business, is sellers' discretionary expenses. We always tell business owners, get 2 credit cards, one that's true business and one that's your discretionary business. Mm-hmm. And this way on the books, we put that as other income and expenses. And this way the owner can see, oh, I spent $30,000 this year that I wasn't aware of, that normally would get buried into the P&L. But in this case, with a separate line item, especially for some of my owners that I know are bad, we line item it right on their dashboard. Like, hey, this is how much you spent discretionary this month. And other business owners want to know, because they want to know, if I need to cut the reins because we're hitting tough times, I want to know what's truly discretionary and what is necessary and mandated for my business. So having that clarity helps a lot.
Absolutely.
Why do you think most business owners struggle with cash flow projections?
It's not always the easiest thing, because there's lots of timing delays in terms of cash. And so it depends how your business is set up. If you pre-bill or get deposits from clients and the work is done later, meaning you have to pay your team later or other vendors, there's a lot of kind of different moving pieces. And so a lot of business owners we find manage their finances and their cash from just the number sitting in the bank account. So month over month, if that grows, they're like, I made money, I'm profitable, which is not always the case, right? Because the timing of cash coming in and the timing of payment. So I always caution people, like, yeah, it's great to see a number grow in there, but that doesn't mean that you're profitable. And just looking at your month over month is not the best way to just say, okay, that's what my cash flow is, because without kind of having it mapped out and understanding the timing of things and what future obligations you have, if you have a loan and the interest rates are rising, you need to expect that interest payment to go up. Different variable pieces that are kind of hard to just do in your head and map off of a number in a bank account. So we always like to, as we say, put it on paper, get everything out of your head versus like, oh, payroll $20K coming out next week, we're great. It's more than that, right? It's kind of putting together your roadmap of what's going to happen.
Do you find that that's what most business owners do? Look at their bank account?
Yeah. And they'll always say, oh, we got about 30K coming in and payroll's 10. So we're going to net 20 next month. I'm like, are you though? Have you ever mapped that out to see that that's what actually happens?
I know we map it out for clients who struggle with cash flow. We actually map it out. Mm-hmm. And we even put the timing in. So we'll look at that particular client. Like you say, some people might pre-bill and some people might post-bill. And even if they post-bill, we'll even put the timing in to say, well, you gave them 30-day terms. So now it's actually 60 days after you did the work. And so by doing that, we can show them looking forward what is coming and what it looks like. And it's really eye-opening. And then it's not usually surprise. We can see the problem months in advance or weeks in advance. It depends on every business. And I think over time, the more and more you do it, the better and better that you get at it. Right. And the more holes you plug into it, that the better your cash flow projections are.
Right. Yeah. When you map it out, then you can see these are my assumptions and what actually happened. Was I close? Was I missing something drastically? And then you learn from that and you incorporate that into your future projections.
And that's exactly what it's all about. We're constantly doing, I like to start with the beginning projection. And then what we like to do is compare that to what's actually happening in the moment and redoing projections and then showing the actual so that they get a better sense of, we said X, this is what's actually happening, and here's the reality of our situation. And then this is what we're forecasting. And
yeah, absolutely.
I think it takes a lot of anxiety away.
Right. Even if it's bad in the sense that your cash is going down, knowing gives you in advance, gives you the power to take the stress of not knowing away and also make plans. Is that, developing a relationship with a bank to get a line of credit that you can draw on for times when your cash dips, but it's just timing, it's coming back. So then you don't have to sit there being like, am I going to make payroll this week when I'm waiting for this, payment to come from a client? It's like, okay, let's have the cash sitting there to relieve that stress. And, and then we can pay it down once we get the money from our clients.
I can't tell you how many times money was supposed to come in.
Right.
And invariably something goes wrong. It's late. And there's always wild and crazy stories of the different things that happen. Well, think about it. I mean, as we're recording this last Friday, a bank went under, and it caused massive ripples throughout the entire system of even everything from payroll to, are we even going to be in business Monday morning? Mm-hmm. So having that ability and understanding it and creating backup plans, I think more and more it becomes very, very important to do all of those types of things. And I've had even small business owners with big banks have weird things happen to them. So having a second set of accounts somewhere else so that if something does happen, you are up and running immediately. You can make choices quickly.
Yeah.
And if you've got large cash balances, then maybe keeping them outside of your main bank so that your reserves you're diversifying and you're keeping it separate and you don't have to worry because weird stuff happens.
I can give you an example of why it's like, even when you're like, I have plenty of cash, I don't need a line of credit. It never hurts to have one available to you. We had a situation where the 401k company auto debits the client's account for deductions as they would, and they messed something up and they pulled $100,000. And who's prepared for that on a random day? And so we were scrambling until we could figure out the issue and get the money back on, okay, what do we do? That's six figures. Like, that's a lot of cash gone. And we got it back. So it wasn't our fault or anything from that perspective. But to your point, you never know, like, freak things happen and you don't want that to put you out of business or not make your payroll because of that.
So true. So why doesn't the P&L match the bank account?
Yes. Great question. So you have two basic financial statements, your P&L, your profit and loss, and your balance sheet. And so when cash comes in or out of your bank account, it gets coded to one of those two financial statements. And so if cash comes out and doesn't hit your P&L because it hits the bank statement, that's going to cause that variance. And so that could be a number of different things. A good example of that would be a note payable. So you have a loan at the bank, and when the cash of $10,000 comes out of your bank account, that's made up of principal and interest. And so the interest hits your P&L as interest expense, but the principal hits your balance sheet and reduces the balance you have left to pay on your loan. So that's going to be one mismatch. And that's something to also consider when you're mapping out your cash flow projections is I can't just look at my P&L and say, okay, this is all of the money out for the month because you're missing, for example, the principal on your note in this example. So there's various things like that that's going to happen with all different types of financing, depending how your business is set up. Like, for example, if you're an S Corp and pay yourself distributions, so some of your money, some of your pay comes directly from the company, that's going to hit your balance sheet as well. And you're not going to see that on your P&L because it's not a W-2 wage payroll expense.
Do you find that most business owners don't pay much attention to the balance sheet?
Yes. There's a pretty good focus on the P&L, but the balance sheet, I think, is not looked at as much and is a valuable, piece and tool for understanding your business and the growth.
I think so. And I've heard it said that if you want to build wealth in your business, you really have to, you almost ignore the P&L and you manage the balance sheet. And those business owners who can do that and understand what's going on, that's truly where it flows to, because the P&L also does flow to the balance sheet. But there are multiple reports and they don't tie together easy. Like in the sense that they don't give you a full picture of what's going on in your business. So being able to kind of read all those tea leaves and combine them, I think is an important skill. And I find that most business owners can't do that well. And for whatever reason, they don't seem to have great communication with the people who are running the reports to be able to understand what they say. Do you know why that is?
Yeah, I think a couple reasons. I mean, some accountants or bookkeepers aren't the best way at explaining it in a way that a non-financial person can understand it. And so that's something that we work really hard on because we understand, that there's a lot of industry jargon. And so we like to break it down into really understandable bits, teach them about the financial statement so that when we do send them monthly, they're looking and they understand what's happening. And then I also think that there's a gap in knowledge of business owners understanding their numbers, even in their own business. They know, okay, I'm making money, I think, each month, but I don't really know why. And I don't really know how to make it better or how to increase profitability. I just know what we're doing right now is working. And so having a solid financial partner, a fractional CFO, someone who can help dive in and really do an analysis on what's going and just really teach them and guide them, because especially if you're working with first-time business owners that have never, whether they come from a corporate job where they never had to manage a P&L, like this is their first exposure to this. And so it's brand new. And I think sometimes people get embarrassed to ask because they're like, I should know this, which isn't true. If you're new to it, or it's even if you're not new, it's a whole different skill set. So there's no reason you should know it off the bat. You just need someone to help you get there.
And I think that the truth is most people don't know it. And I think that's why most businesses struggle over time. And when you actually start to question it, ask it, and do the hard work, then you start to become one of those businesses that thrives well and has great cash flow, and a lot of the problems hopefully go away.
Yeah.
If people would like to learn more about you and your services, what is the best way for them to do that?
Yeah, so you can go to our website, colsonstrategies.com. That's COLSON. There's a way to get in touch with us there and learn more about what we do. You can reach out to me on LinkedIn. I love LinkedIn, Lauren Colson. Or you can reach out to us directly at info@colsonstrategies.com.
And we'll put the links in the show notes. Thank you so much for joining us today.
Thanks for having me, Rocky. This was fun.
How fast does your cash come in after the sale? Some people get it up front. Some people are waiting months after the sale, which can be stressful. Knowing when the cash is coming and being able to forecast that is important. We build cash flow planners for our clients, and we also teach it in the Profit Blueprint program. It really helps them to have peace of mind and to make decisions and make changes before the problem occurs instead of afterwards in reaction to it. Trying to read the tea leaves of all the financial reports is not easy because they weren't designed to make you profitable. They're designed for bankers and for the government to tax you. That's why we take information from multiple places and bring it all together for our clients. The Profit First cash flow system is a simplified way for you to track your cash. But as you grow, it may not be enough for you to be able to predict. Some businesses can, some can't. Here's the real question. Where are the leaks in your business? This is what we do for our clients on a monthly basis. Look for leaks and plug them. In the Profit Blueprint, we have an entire exercise on how to do this. It's the core of that Profit First mentality. It is so easy to waste money in business. Trust me, I see this all the time. This is why we say you don't need more resources. You need to be more resourceful. Remember to focus on the bottom line.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done for you service, you can hire us as your chief profitability officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
This episode of the Profit Answer Man podcast is brought to you by SMBpodcastnetwork.com. The network is a collection of podcasts and shows from around the internet which focus on bringing you interviews with amazing guests who share actionable advice, ideas, and information for small and medium-sized business owners and entrepreneurs. Visit www.smbpodcastnetwork.com to find more great shows and easily subscribe to be notified of new episodes. It's a great way to discover quality content. If you've discovered us via the network, then I hope you enjoy today's show and will consider subscribing directly so you never miss our episodes. Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.